kupitia tunatuma kwa email yako. In fact hapa tukukusaidia wananchi wetu.
Yeah.
Kama mtu ana maswali ya kuuliza kuhusu taxes, kuhusu tu mambo yake ya PIN, maswali yote unatupigia simu kwa sababu tuko na namba na ni 0711 099 999. Ama unatutumia email. Actually kama hiyo ni ngumu, tuko kwa mtandao.
Okay.
Tuko Facebook, tuko Twitter, tuko LinkedIn.
Okay.
Tuko pia TikTok. Tuko pia.
Umesema hii ni KRA ukweli.
Alafu ni
Inafanyia watu hizo vitu zote. Moja ambayo mtu akisikia jina KRA anaingiza pariti. Hii KRA moja ambayo mtu akinunua kitu anaogopa kupost kwa social media kwa sababu anaogopa atakuchiwa. Kama ni pinji ni pinji. Hii sio ya ukweli. Hata maki akipole hapo kwa hiyo furuku ya hapo awali.
It's okay.
Nisamehe. Sasa hii ndio contact center yenu.
Ndio contact center yetu.
Hi guys. Oops, man is to air. Nataka kusikia test ya mtu mmoja. Oh my god, inakaa vizuri aje? Oh, eish. Na KRA iko na watu wanakaa vizuri hivi. Iko na mapepi boy. Can I be your pepi girl? I am your tax. Withhold me. This is a contact center. Conduct me. Hey, madam, chipe shughuli bwana. Shift pato ichaisha. Are you jealous? Haters con hates, and if you don't know, now you know. I love the lion on your shirt. Can you be my lion? Ra, rabada, ra, ra.
Good evening again, Eugene. Can you hear me? Eugene from MFA. Mr. Makoha, can you hear me? Okay. Kindly bear with me as we get hold of a ministry. We cannot start without their presence. Kindly bear with us as we get hold of, I see Eugene in the call, but I'm not sure whether he's able to speak. Eugene, can you hear me? All right. Kindly allow me a minute or so to just check on them one more time.
Hello.
Hello, Balozi. How are you?
I'm fine. Thank you.
Good to see you. How have you been?
I've been quite fine, but you have been so quiet on your side. Eh? What have you been up
working
to?
very hard. We are working very hard.
Okay.
But you are well. We can't complain despite the chilly weather, but we thank God.
Yeah, sure. You know, these rains have come at the right time. We were really looking for them. Eh?
Okay. Yes, we are grateful.
Yes. So how many people are in the house?
We have 120. I think it's a good quorum. With your indulgence, maybe you could guide us how to proceed.
Yes. First of all, I want just to find out whether my colleagues have joined in. I know there was a bit of lapse in terms of communication. My colleague in the US, I think he got the information rather late, and is also involved in another exercise there. So I don't know, but let me just find out. Let me see the list of participants. Then I'll guide. You can see we have 115. Let me just run through them.
Okay.
And then I come back to you if you don't mind. Huh?
That's okay, sir. That's okay.
Yeah. Okay, Sheila.
Yes, sir.
I think we could start.
Okay.
My other two, I was expecting Ambassador Nasara Samayo.
Okay.
And Ambassador Thomas Waka from our Consul General in LA, but apparently they're engaged.
Okay.
Yeah, they'll be joining us in due course. So basically, I think we could start.
Okay.
I don't know whether you want to have somebody to offer a word of prayer before we start. Then probably after that, we can have my opening remarks.
Okay.
I will hand it over back to you.
Thank you, sir. That's in order. I would ask my colleague Santana to graciously lead us in a word of prayer. But sir, before you come to the floor, I'd also like to give a chance to our chief manager who's in charge of international relations and diplomacy, Madam Margaret Irungu, to welcome us to this forum that we have jointly convened for our brothers and sisters. Waziri, I've also noted that beyond the Americas, we also have audience from Rwanda, and I would like to request if they are kind enough to maybe just post on the chat so that we can know where they are joining from. We are many, so we can't introduce ourselves. If they can do that on the chat. But maybe before we start, as you've guided, we'll start with a word of prayer from Santana.
Okay, let us pray. Heavenly Father, we thank you for the opportunity to gather here as one. Father, we pray that as we begin this session, that you would guide our conversations and that your presence would be with us. It's in your name, Jesus, I pray. Amen.
Amen. Thank you, Santana, for the prayer. Balozi, allow me to invite Madam Margaret Irungu to just give us a welcoming remarks briefly before we can invite you to give welcoming remarks. Over to you, Madam Margaret.
Thank you, Sheila, and thank you, our participants. Good morning, good evening, wherever you are. We are grateful that we called upon you to participate, and thank you, Ambassador, for the good work that you have done in ensuring that this happens. So for us at KRA, we are grateful and we want to engage with our brothers and sisters so that we can create clarity on issues, matters tax, matters customs, and I assure you that we have a very able team that will be interacting with us. So without further remarks, I would like to say thank you and welcome to the forum. Thank you.
Thank you very much, Madam Margaret, for your kind words and for welcoming us to this forum. I hope everyone would be very active and attentive to learn from this session. Waziri, I would like to singularly welcome you to speak to us and also give remarks on behalf of the ministry. Welcome, sir.
Thank you so much, Hila.
Balozi, we are losing you. I think your sound is going faint.
Is it okay now?
Faintly. We can see you well, but the sound is a bit low.
No. Okay, thank you so much. Thank you so much, Sheila. Thank you so much, Margaret. Yes, good evening and good morning, everyone, to all participants. My name is Ambassador Washington Olo. I'm the Director for Diaspora Affairs in the Ministry of Foreign and Diaspora Affairs. Now, indeed, I'm very glad that, of course, most of you could get time to attend this important event. And of course, just also to let you know that the State Department for Diaspora Affairs has partnered with the Kenya Revenue Authority on issues of tax education, particularly with regard to tax and customs compliance. This one that we are holding today is the fourth in a series of sensitization exercises that we had lined up. They started sometime last year. I think the first one took place last year in October. And we have been doing this in conjunction with the KRA, collaboration between KRA and the State Department for Diaspora. And it is part of our continuous engagement of the diaspora as outlined in our six-point mandate that we were given by the government to undertake. Now, the Executive Order number 1 of 2023 on the organization of government of the Republic of Kenya specifically mentions the promotion of a continuous dialogue with Kenyans abroad, and of course, mainstreaming the Kenyan diaspora into our national development. Now, a lot of dialogue takes place, and we are required to ensure that we have dialogue with the diaspora, because some of the things that do happen, and when we try to engage the diaspora in national development, we have to communicate, we have to dialogue, we have to always engage. So this is part of that mandate that we undertake. Now, the ministry through the State of Department Diaspora has been implementing the diaspora policy since 2014. And of course, this policy is currently under review. Last week, we had a meeting in Safari Park, an inaugural meeting, and we are calling upon stakeholders. We shall be soon circulating the draft so that we can have comments from all of us in the diaspora and of course our stakeholders like KRA. Part of the things that we are looking for at the near and the distant future is the growth of the diaspora in terms of opportunities for employment, diaspora remittances, and of course the organization of diaspora investment vehicles such as circles that we have seen right now is very, very important. A lot of circles are very active and are doing a lot in terms of investment. The issue of diaspora remittances is also very dear to us, and we are coming up with initiatives to ensure that the diaspora remittances do keep on coming in. Similarly, the State Department would like to facilitate knowledge, skills, and technology transfer, particularly also on the diaspora returnees. We are also coming up with diaspora returnee programs. Now, what we are doing today and our partnership with KRA is part of that knowledge, because so many of us do not know what our obligations or what we need to do, and quite often we do have questions from the diaspora on what is required in them. So I'm happy that a team from KRA is here with us, and they're going to answer all those our questions. And I want to urge all of us, the present today, that ask any questions, feel free. Those issues that have been bothering you in terms of customs and regulations, I think this is the right forum that we need to bring them up, so that at the end of the day, we'll be clear on what is expected of us regarding our the issue of taxes and customs clearance. As a State Department, we are also looking forward to work with you, the diaspora. We want to tap into the important resource that you have, and to ensure that, of course, we are always reachable. Right now, in the US particularly, we have a mobile consular services, and I think most of you have been informed. We have been running a program for the last 1 month, a survey, and the exercise will be starting next week. And we want to provide all those consular services, issues of passports, renewals, IDs, etc., etc. So you just need to check on our website in our embassy at BC, and you will know exactly which cities we shall be in and on which days. With those few remarks, let me take this opportunity to thank you, our velocities abroad, for bringing in participants from your areas of jurisdiction and for facilitating this meeting. Let me also thank the KRA for their time, and of course always be available to provide the information and to educate our diaspora in terms of educate them on their tax obligations and what is expected of them with regard to tax filing and customs. Thank you so much, and I'm wishing you a fruitful meeting. Sheila, back over to you.
Thank you very much, Your Excellency. We truly appreciate your presence. We truly appreciate your remarks. And with your blessings, we know that we are off to a good start. Thank you very much, even for the support that you continuously extend to KRA. We don't take it for granted. Thank you so much. I hope you'll be staying until the end of this webinar.
Sure, thank you.
Thank you very much. Thank you very much, Waziri. With your permission, sir, the program is threefold. We will have a presentation by the Customs and Border Control. We'll also have a presentation by our Domestic Taxes Department, and then we'll have a presentation by Marketing and Communication. Towards the end of these sessions, we will receive the presentations, and then we'll have a session for question and answer, where we will have all our questions. However, we encourage all participants in this call to either raise your hand or use the chat button to raise any questions. And our teams in the call, I've seen Nelly, I have seen Isaac, there's Rispa, progressively will be answering this question on the chat, because we know the time limit cannot allow us maybe to exhaustively respond to each and every question, but if time allows, again, we'll do that. If not, please, you're encouraged to use the other avenues to channel any question. Please do not hold on any burning matter. At this point, Waziri, Balozi, if you allow me, my apologies for that. I would like to invite Mr. Isaac Kweyu, who is a senior tax expert from our domestic taxes, to take us through the domestic taxes presentation. After that, he will be followed immediately by Madam Rispa Owino, who will take us through the customs. And after that, we'll take another presentation. Then we open the session for question and answer. Isaac, over to you.
Thank you so much, Sheila. Good evening, fellow Kenyans in the US, Boston, Minnesota, and also Texas. And good evening, fellow Kenyans here. Thank you so much, Ambassador of Washington, for putting this together. My name is Isaac Kweyu from the Domestic Taxes Department, Policy and Tax Advisory. So allow me to share a presentation as I'll be taking you through what we do at Domestic Taxes Department. Sheila, kindly confirm that we're able to see the presentation.
Yes, from my end, I'm able to see it. Proceed.
Thank you so much. Okay, so the Domestic Taxes Department, just from the word domestic, we administer taxes that are levied on income that are earned in Kenya. And also we have taxes that are levied on services or services that are offered or goods that are supplied. So basically that is the scope of Domestic Taxes Department. And we just want to delve deeper and appreciate how exactly you go about administering domestic taxes and who is liable to these taxes and what is required of you and me in as far as complying with the domestic tax laws. So for Kenyans living in diaspora, yes, we're talking about domestic taxes, and here it's referring to Kenya. However, situations whereby, in as much as you are living outside Kenya, you may have some tax obligations. Tax obligations may arise, and we're going to look at such situations. So in domestic taxes, there are two categories, broad categories of taxes that administer the direct taxes and indirect taxes. When you're talking about direct taxes, basically you're talking about taxes on income, the income that you earn from employment, businesses, rental income, perhaps you're offering some consultancy services, the income that you earn from the service you offer or the goods that you sell, then that's what is referred to direct taxes. And these taxes are determined, the applicability of these taxes are determined whether you're a resident or a non-resident person, and that's it's a legal term that you're going to look at. You're going to define it later. And what you're saying is that direct taxes will apply on income that accrue or are derived in Kenya. So if you're earning employment income here in Kenya, if you're earning business income, rental income, then you're liable to paying direct taxes. Then when it comes to the indirect taxes, examples of VAT, value-added tax, and excise duty, and they are charged on certain items. When you purchase or you buy, procure certain items that are liable to VAT or excise duty, then that tax is included in the purchase price. And that's why it's called indirect, because you're not paying that tax directly to the commissioner. You are paying indirectly by virtue of consuming or buying that particular item where taxes are embedded in the price. It also applies on importation, and when you import, there are certain items that are liable to VAT and excise duty. So to that extent, they're referred to indirect taxes. Now, these are the term that were alluded to earlier about residency, a very key term, because it determines whether a tax obligation will arise or not, or also the applicable rate of tax that will apply to you, depending whether you're a resident or a non-resident. So the term residency has been defined in law, and allow me just to read as it is, because every word there I think is very important, that if you have a permanent home in Kenya and you're present in Kenya for any period in a particular year of income, then you qualify as a tax resident. And a permanent home means that you have a place to reside that is readily available for you here in Kenya. Or if in the opinion of the commissioner, you have some personal or economic interests that where your personal or economic interests are closest. So in as long as you have a home that is readily available for you that you can reside, and you're in Kenya at any particular time in a year of income, then you qualify as a resident. So for fellow Kenyans in diaspora, perhaps you have a permanent home here in Kenya and you've come to Kenya, let's say in the year 2022, even if it's for a day or so, then you qualify as a resident because you are here in Kenya in that year of income. Suppose you do not have a permanent home, you do not have a home that is readily available for you when you come home, then in case you come home for and you're in Kenya for 6 months or an aggregate days of aggregate of 183 days in a year, that is roughly 6 months. If you're here for 6 months, you do not have a permanent home, then you qualify as a resident for tax purposes. The other option is that if you're in Kenya in a year of income, and the 2 previous years, for example, if you're looking at 2022, you are here in Kenya, then in 2021 and 2020, you're also in Kenya. And if you add the number of days, you aggregate those number of days that you're in Kenya for this current year that you're looking at and the 2 preceding years, and the average 122 days in each year of income, then you also qualify as a tax resident. And we're going to look at the applicability of this term residency in as far as administration of domestic taxes is concerned. So that is as far as a natural person is concerned. But again, you also have should I say an artificial person or a non-individual who can qualify either as a resident or a non-resident. So for a company to qualify or an entity, a non-individual to qualify as a resident, then you have to be incorporated under the Kenyan laws, Kenyan registration laws, be it the Companies Act, be it perhaps the Societies Act, and so on and so forth. So if you've been registered here in Kenya, you've been incorporated here in Kenya, then you qualify as a tax resident. Or if you are declared by the minister or the CS to be a resident through a gazette notice. So those are the conditions in which somebody can qualify as a tax resident here in Kenya. So we as I said earlier, that we operate a source-based tax system, because the incomes that are chargeable to tax that will give rise to a tax obligation here in Kenya are those that have accrued, that you have earned here in Kenya. Yeah, you have been employed here in Kenya. You have a business in Kenya. You have rental properties. You offer consultancy services. You've supplied some goods here in Kenya. Then that income has been derived here. It has been sourced here. Then it's taxable here in Kenya. However, there are situations where you can have accrued income outside. You're employed outside Kenya. Like for example, now fellow Kenyans in the US. So there are situations whereby that income that you earn is in the US is taxable here in Kenya. So if you are a resident and you looked at the term resident and you earned employment income outside Kenya, or pension relating to employment that is also carried out here in Kenya, then that income is deemed to have been derived here in Kenya. You've been employed, your employee is outside, but in that year of income, you are a resident, you qualified as a tax resident, and you looked at the conditions for qualification of residency. So in that case, that income that you earned outside Kenya, the income that you earned from your employer in the US would qualify for tax here in Kenya. Or if you're in business and you're carrying out business partly here in Kenya and partly outside, in this case, maybe you're carrying out a business in the US and partly here. You've perhaps opened a branch of your business in the UK, then the whole of that income that you earn from that business, including that which is that has accrued from outside, then is taxable here in Kenya. So you are required basically to declare the whole of that income, that which has accrued here and that which has accrued outside, and pay the requisite taxes accordingly. But it doesn't end there. We're just going to look at further provisions in as far as that is concerned. We're going to look at perhaps what comes to mind. You might be saying perhaps you're paying taxes in the US. Then how can I pay the same taxes here in Kenya? I'm going to look at more provisions relating to that. So direct taxes, that is taxes on income, include, the income that you're talking about include profits from business. So when it comes to a company, and it has made profits in a year of income, then if it's a resident company that is here in Kenya, then the applicable tax rate is 30%. If it's a non-resident company, it's not registered here in Kenya, but perhaps it has a branch. The company in the US, it has a branch here in Kenya, then that is deemed to be a non-resident. In other words, that branch has not been, the entity in Kenya, it has not been incorporated here, so it does not qualify as a resident. So in that case, the applicable tax rate would be 37.5%. Is a non-resident with a permanent establishment here in Kenya. It has a branch, it has an office here in Kenya. Then when it comes to individuals, we usually refer to as a graduated scale. It ranges from 10% to 30%. A certain category band of income is taxed at 10%. The next tax at 25%, then at 30%. So basically, those are the applicable tax rate when it comes to profits from business. When it comes to employment income, and of course, employment now, it means it's a natural person, an individual. Again, the applicable rate will be the graduated scale that ranges from 10 to 30%. And there's a special kind of system that in this tax is collected from employment income, popularly known as pay as you earn, where the employers under obligation, they are required to deduct that tax and remit to the commissioner through a system called pay as you earn. So basically, the employers are agents; they act on behalf of the commissioner, and as I said, it's an obligation under the law, so it's a requirement. An employer really has no choice, in as long as you have you are paying people salaries that qualify for within the tax bracket, then one is required to deduct tax and remit to the commissioner through the pay as you earn. Where an employer does not do that, it means that you have complied with the law. And again, there are repercussions to it. Then perhaps you have some rental property. Rental income is also subject to tax. You have rental properties here in Kenya. If maybe it's a residential property where people have rented for residential purposes, there's a tax regime called monthly rental income, or popularly known as MRI. You pay 10% of what you receive, and that is a final tax. So in as long as the income that you earn does not exceed 15 million shillings per year within that category, then you pay 10% of that. If you're a resident. In case you're a non-resident, and we talked about who is a resident and who is a non-resident. You're a non-resident and you have some rental properties here in Kenya. That may apply to maybe you're in the US and you've put up some property here in Kenya, and in that year of income you did not qualify as a resident. Then you're required to pay 30% of the gross receipts, whatever you receive from that rental property, and it's a final tax. We also and under rental income, you can either be under this regime, what you talk about monthly rental income, or you can be under the income tax regime, where you pay tax under the graduated scale, which ranges from 10 to 30%. The difference is under the MRI regime, it's 10% on the gross and it's final tax. Under the income tax regime, you deduct expenses. Perhaps you paid a caretaker, you've done some repairs on that rental property. Perhaps you maybe some property agents. In that case, whatever expenses you've incurred are liable. My apologies. I think my
Isaac, you have connection. Your connection is fluctuating. We lost you a bit.
My
apologies. Maybe you could just start from the rental income bit.
My apologies, Sheila, for that. Yeah, I was saying when you have rental income from rental properties, it's subject to tax here in Kenya, and we have different regimes in which this income can be subjected to tax. If the rental property that you
We've lost you, Isaac, again.
1%. My apologies for that, Sheila. Hope I'm back.
Yes, you are.
Thank you. Under the MRI regime, as I said earlier, you pay 10% of 10% of the gross income that you gross rental income, and is a final tax. However, somebody can opt to be the income tax regime in as much as you're receiving rental income. In that case, it will be taxed at graduated scale, which ranges from 10 to 30%. The difference is you'll be expected, you're allowed to claim any expenses that you've incurred in earning that rental income. You know, you have paid maybe a caretaker, you have paid a property agent, you did some repairs on that property, perhaps you then those are liable that income is concerned. We will go to now to capital gains tax. Capital gains tax is tax payable on on transfer of property, and from 1st of January 2023, the rate increased from 5% to 15%. In case you have some property, and property you're talking about buildings, you're talking about shares, such kind of property, perhaps you bought and you sold it at a gain. In that case, the transfer of that property will be subject to capital gains tax. Currently, it's at 15%. So basically, it's what you have earned, the consideration. Perhaps you sold a building and you earned 10 million shillings, and that building you had incurred. Perhaps you bought it, and perhaps you had bought it at 5%, and all the related costs, or rather at 5 million shillings, and all the related costs maybe add up to 6 million shillings. So basically, capital gains tax will be the difference between what you earned in selling that building and what you incurred in acquiring the property. We also have a tax regime, a simplified tax regime known as turnover tax. Turnover tax is for small businesses whose turnover ranges from 1 million to 50 million in a year of income. And basically, a person pays 1% on the gross turnover. And it's a final tax. So if you have a business and the turnover in a year of income ranges from 1 million to 50 million shillings, then you are expected to pay turnover tax, which is a final tax. Basically, this one you pay on a monthly basis. So you compute what you've earned in a month, then you compute 1%, you pay tax, and it's a final tax. Then we have finally digital service tax, which is payable by non-residents who are conducting business over the internet. Perhaps you offered a platform where people can transact over the internet. Perhaps you're offering a service through an electronic platform. In that case, and you're a non-resident, or you define who a non-resident is, then you are required to pay digital service tax, and it's basically 1.5% of the gross transaction value. When this tax was introduced, it was payable by both residents and non-residents, but currently it's only payable by non-residents. So in as long as you're offering a service through the digital, a digital platform, then and the non-resident, you are required to pay that tax, digital service tax at 1.5%. Now, Yeah, we talked about situations whereby, you know, you may earn some income outside Kenya and they are taxable here. And now that brings in the issue of double tax treaties, popularly known as DTA, or double tax avoidance treaties. So these treaties that Kenyans are signed into form part and parcel of our tax laws. So you know, we're in a country where we have a double taxation treaty, and we are determining a tax treatment of a certain income that a person has earned from that country. Then we have to look at the provisions of the DTA, or the double or the tax treaty that you signed in that country. So these are provisions for tax reliefs and deductions for taxes that may have been paid outside Kenya, that are such that now a Kenyan in diaspora does not suffer double taxation. You know, we have said that you've earned income outside Kenya, and that income is taxable here in Kenya, but you know, you've already paid taxes in that country that you earned that income. In this case, maybe the US. So where in situations where Kenya has a double tax treaty, then the treaty will provide for relief, so such that you do not pay tax twice on the same income. In this, these treaties are basically between two jurisdictions. They allocate taxing rights. You know, this income, and which country should this income be taxed? You know, you've signed maybe a treaty with the UK, and somebody in the UK does earn some income here in Kenya. So the DTA, the double tax treaty, will provide for taxing right, and just guide on how exactly this income should be taxed, so that to prevent double taxations. So currently we have 16 double taxation agreement. However, we do not have a DTA with the United States of America. Currently, we do not have a DTA in force. So these are you know, in that case, situations of double taxation may arise because we do not have a treaty between Kenya and the USA. However, in as much as we do not have a treaty with the US, you know, the Kenyan tax law provide for a tax relief for Kenyan citizens. Perhaps somebody has earned employment income in the US, you know, income from entertainment. An athlete is ran in the US, or a sportsman, and he earned some income there, and that income was subjected to tax. As we said, since employment income is taxed, you know, it's worldwide. You know, you're taxed here in Kenya, you're taxed on your worldwide income. Then you're expected to declare that income here in Kenya. However, if you're a Kenyan citizen, whatever tax that you paid maybe in the US, you'll be given a relief, or rather you'll be given a deduction. For example, if you declare that income here in Kenya and the tax is, let's say, 10,000 shillings, and you had paid an equivalent tax of 9,000 shillings in the US, then you'll not be expected to pay the 10,000 shillings. You'll be given a deduction of what you paid in the US. In this example that I've given, it's 9,000 shillings. So you'll just pay the difference between, you know, the tax payable of 10 and what you paid in the US was 9. So you've already paid part of the taxes. So you'll only pay the difference. In case maybe the tax that was in the US was higher, then you can only get relief up to the maximum of what was to be payable here in Kenya. So that is what I indicated earlier, just to address situations of situations whereby the same income can suffer double tax. So in as much as we do not have a treaty with the US, I think it's important to note that in as long as you're a Kenyan citizen, then you're entitled to a tax credit of what you have paid outside. You know, when it comes to employment income, when it comes to entertainment, athletes, you know, or sportsmen. Hope that is clear. But of course, you have to demonstrate that you actually paid taxes in the country where you that income was earned. Secondly, perhaps it's a business and you have paid maybe taxes in the US, and we said if you're conducting business partly here in Kenya and partly outside, that all of that income is taxable here in Kenya. But in case you paid taxes, let's say in the US, in that business that you're partly conducting there, then the law allows you to deduct that tax that you paid as an expense. So the difference between bullet 1 and bullet 2 is that under bullet 1, when it comes to employment income, you get a tax relief or a tax credit. But under bullet 2, when maybe it's a business, is a business that you're conducting, and you've earned maybe you've made a profit of less than 100,000 shillings, and in the US you paid maybe taxes of 10,000. The law allows you to deduct the 10,000 such that now 90,000 will be subject to tax. In other words, the taxes that you paid abroad, the taxes that you paid outside, will be unallowable. It will be treated as an allowable expense. So just take note of those two kinds of relief. One is a direct deduction from the tax payable. Another one is an allowable expense from the income that you've earned. Now, what tax compliance? Just want to mention briefly about if you have a tax obligation, the law expects you to comply with that tax obligation. So, what is this tax compliance that what is this tax compliance that we are talking about? So, it's you're expected to register. You're expected to register the commissioner in as long as you have a tax obligation. You have an income that is subject to tax. You have you have employment income, you have business income that is liable to tax in Kenya. Number one, you're supposed to register with the commissioner and be issued a unique identifier, what is popularly known as a PIN, a personal identification number. In case also, this registration will depend on the obligation in which you are liable to. It can be VAT, it can be excise, it can be income tax. For an employer, it can be pay as you earn. You need to register for that tax obligation. That's the first step. And in case you don't register and you're liable for registration, again, it's an offense. It means you've not complied with the law. And again, the repercussions to it. It comes to second obligation. Once you have registered, you are expected to submit returns. You're expected to make declaration. A return is basically a declaration of income. So you're expected to file returns periodically. It can be on a monthly basis, like pay as you earn and VAT and excise. It can be annual, like income tax for individuals or a company. So take note that that is a second obligation upon registration. When you file a return, it can give rise to another obligation, which is a payment of tax. Basically, filing a return is a declaration. This is an income that I earned, and you've computed your taxes. So you need to pay. If there are taxes that you have declared, then you're expected to settle that tax liability. In case you don't settle in time, then again it will give rise to penalties and interest. So there are returns that you may file that may give rise to a payment obligation. Perhaps maybe you're on a credit. Perhaps maybe it's a nil return. Then in that case, you do not have a payment obligation, but you'll be required to file anyway. Then there's a reporting. Basically, it's Kenya operates a self-assessment regime, and it's expected whatever you declare is you reported accurately. You've declared accurately. So the information that is contained in the return, in the declaration that you've made, it's presumed that you've declared the true and correct position. However, the commissioner is allowed to conduct compliance checks and audits just to confirm the accuracy of the returns that you have filed. Now, the good news also is that all these processes are automated. They are fully automated when it comes to registration, filing, payment. They are all automated process through a system called iTax. So you register online, you file return online, so wherever you are, and you pay those taxes online. So we also have a comprehensive compliance management program, where taxpayers are categorized into various segments for easier administration. So we have, we have the large taxpayers. They have an office that they are administered under. We have medium taxpayers, and also we have small taxpayers administered under various tax service offices around the country. So basically, it's a compliance management program where also in those offices we have account managers who are able to handle any tax issues that you may have or that may arise. So basically, that's the tax administration. That's basically how taxpayers are administered under the domestic taxes department. Finally, do want to talk about a voluntary tax disclosure program, which is an amnesty program that has been running for from 1st of January 2021. It will be ending at the end of this year, 2023, where taxpayers were given a window to declare income that you've not declared. As I indicated earlier, we run a self-assessment regime where it's presumed whatever you declared is correct. However, that may not be the case in all situations. Perhaps there's a year that you did not declare all your income. There's a window under the voluntary tax disclosure program where you can declare income that you earned from June 2015 to June 2020. Income earned over that period, you declare under the tax amnesty program and pay. So it's a voluntary tax disclosure program where whatever you declare has to result into tax. So it will not be it will not result into a refund or a credit. Whatever you declare has to result into tax. So since you'll be declaring late, and generally when you declare late, there are penalties and interest, but under this program, you'll not suffer any penalties and interest. If you declared in 2021, then you get 100% waiver of those penalties and interest for those who declared. For those who declared in 2022, they get a 50% waiver of applicable penalties and interest. And for those of the taxpayers who are declaring in 2023, you get a 25% waiver of those penalties and interest. So basically, that's how the program works, and it will run until end of this year. So any person who's not who has some undisclosed income that are liable to tax can take advantage of this program, to avoid penalties and interest that accompany non-compliance. So Sheila, I think that is it. Just a brief presentation of what we do under the Domestic Taxes Department. Thank you so much.
Thank you, Isaac. I know you have just presented a highlight, very high level kind of presentation because of time, but we truly appreciate. I have seen quite a number of questions coming through. I am hesitant to invite your comments at this point. Allow me to invite RISPA as we go through and filter all the questions from your presentation, and then we'll invite you to respond to all of them. If you can, Isaac, maybe you can also start responding through the Q&A chat, quite a number around double taxation, rental income, and how do we tax expatriates and so on. Please, if you can already start responding to that. RISPA, kindly prepare to take the floor, but however, Isaac will have a chance to respond to all these questions after RISPA has presented. Madam RISPA? Participants, still you encourage to send in your questions as many. RISPA, kindly prepare to take the floor, but however, Isaac will have a chance to respond to all these questions after RISPA has presented. Madam RISPA?
Okay, good evening and thank you for the invitation.
Participants, still you encourage to send in your questions as many. RISPA, kindly prepare to take the floor, but however, Isaac will have a chance to respond to all these questions after RISPA has presented.
Okay,
Madam
good
RISPA?
evening.
Okay,
I hope you can hear
good
me.
evening
and thank you for the invitation.
Participants, still you encourage to send in your questions as many. RISPA, kindly prepare to take the floor, but however, Isaac will have a chance to respond